residential inventory this year?
Yeah, our inventory is definitely way up in 2008 than it was in 2007. But it's a more typical inventory.
Okay.
We are, after being in the business for 20 years, I've seen the market go up and go down and go up and go down. And we were just at a very high period for the last few years, and we're now even. And this is a typically good market, but it just doesn't feel good after the type of market we came off of.
Okay. So now I know that some hot markets, they go up, they go down, and sometimes markets go sideways. In your opinion, where do you feel as though the real estate market is headed at this point?
I think we're stable for a little while right now. I think we've got a lot of inventory out there. Interest rates are still low, so we still have buyers, but things aren't moving as quickly as we've been used to. We're not seeing dramatic decreases in prices at all.
Okay.
Overall in the region, there was only a 3% decrease in market in sales.
Okay.
So we're seeing, a stabilization in our area. All real estate is local. And what we're hearing on the news is really national media. And we're hearing the drama of the nation. But our real estate market in Philadelphia is really okay.
Okay. Now, in terms of the subprime market, basically, if you qualify for a subprime mortgage, you basically fall into the category as a subprime borrower. In terms of the subprime mortgage market meltdown, do you feel as though the mortgage subprime market will eventually pick up, or do you feel as though it's just going to drop at this point?
I think we're going back to what was when I knew of subprime, what subprime was. Okay. Subprime truly then and is now again a buyer that has some credit issues but can show some type of money up front or some proof of working on it, that there will be borrowers out there that will allow them to have a mortgage. What happened with the subprime market was that they were trying to figure out how anybody with any score could be lent money at maybe a very high interest rate and taking big risks, and that's what's created a lot of the problems in the foreclosure world.
Okay.
So yes, the subprime market has changed, and I don't think we're going to see it going back to what it was over the past couple of years. I think we're going to see what true subprime means.
Okay. Okay, now in terms of first-time homebuyer programs, Fannie Mae and Freddie Mac, can you basically tell our viewers what qualifications that they have to go by in terms of buying their first home?
Well, there's the first-time homebuyer programs. There's some grants out there, state grants and state money, and most of it is based on income levels.
Okay.
So each program, you first have to qualify for a mortgage, and then you may be able to qualify for grant programs based on your income.
All right. And are you familiar with Fannie Mae and Freddie Mac?
Sure, they're the secondary loan market. That's where the mortgages get sold.
Okay, so my intuition is telling me, in terms of Fannie Mae and Freddie Mac, Fannie Mae and Freddie Mac, they are a quasi-governmental agency. And that basically means banks don't have bottomless wells full of money when they can lend out $100,000 to everybody to come into the bank that want to purchase a home, and you make these payments of $500 a month back to the bank, they'll run out of money. So what the government has done is they help set up a secondary market. So basically what happens when you go to borrow money from a bank, 90% of those funds borrowed are sold by the bank to the secondary market, which is Fannie Mae or Freddie Mac. So although you still pay the bank back on your mortgage, the bank is just a servicing agent. So I would like to ask you, do you think the banks have potential clients' best interests at heart, or do you think the banks only have their best interests at heart in terms of the loans that they provide to people that qualify to get them a house?
I think that a bank is a business, and every business is looking to their bottom line and their profits.
All right.
It doesn't mean it's necessarily at the expense of anybody else, but a bank that's not going to be profitable is not going to be in business very long.
Okay.
So I think that they are functioning to be able to stay in business. They use Freddie Mac and Fannie Mae's guidelines, mostly Fannie Mae's guidelines, when lending money, because they do want to be able to resell that to the secondary market so that they have more money to lend.
Okay.
So that, the guidelines are set by the secondary market often.